Hello everybody, welcome to the Fundamental Analysis webinar this evening. My name is Troy, I'm a Senior Account Manager with AvaTrade. I'll be presenting this evening. Before we get started, let's do a quick systems check. Type OK in the chat box if you're hearing me clearly and seeing my screen all right. All right, great, I've got enough responses, thank you very much. If anyone has any issues as we go along, please feel free to let me know. As always, we always cover the risk statement here. I think we all understand that no one trade is guaranteed to profit. There's certainly risk involved with any trade that you make. The idea is obviously to manage your risk in a way that makes sense for you and your account. And at the same time, from an educational perspective, take some of the things that we cover, hopefully, and improve upon your success in terms of P&L at the end of the day, the end of the week, the end of the month. Make sure that as we go over things, not only understand the risk, but you also understand some of the tools that can help you manage that risk. And we'll go over some things as we go through the charts, and we'll go over maybe the Ava Protect feature from the AvaGo mobile app, which is a unique way to help you manage risk. Now, as we go through the information, keep in mind that what we cover is not meant to be financial advisement, but is coming from an educational perspective. Now, before we get on the charts on my demo account, let's just go over some general ideas about fundamental analysis. In general, fundamental analysis has two main types. It's regular economic events, which are scheduled. We know the day and time, like the FOMC meetings start tomorrow and go through Wednesday. We know the time that these events will occur. We know what the topics will be in general. There are jobs numbers, factory production numbers, an OPEC meeting. All of these things are the type of regular economic events that are on an economic schedule that we'll even take a look at today and can be planned for in terms of maybe what assets they'll affect most and the timing of when these events will occur. Then the other type of fundamental news would be the type that is less predictable in terms of scope and timing. At any time there could be breaking news about a new vaccine for the virus, or there could be breaking news about US and China, or any number of things that could come unexpectedly. And those types of fundamental news stories, while it might seem can't be planned for, they actually can be in terms of your risk management plan and your setup of maybe pending orders and these sorts of things to plan for the unknown even. Yeah, Quinton, all of the webinars are recorded and available on our YouTube channel. So either talk to your account manager for the link for our YouTube channel, or just go to YouTube and keyword search AvaTrade channel, and you'll find the AvaTrade channel. And there's a specific page for English-based webinars, and we also have webinars in other languages as well that you can check out. So by the next business day, typically sometime tomorrow, this webinar will be posted, and you can look at what we talked about last Friday, which came strongly to fruition with oil, and some other things that we covered last Friday as well. And for that matter, you can, for repetition's sake, go through and see the strategies we've covered over the past weeks and months as well. While the movements on those assets specifically in terms of entry and exit points won't be relevant from weeks ago or months ago, but the strategies would be, and can be applied at any time. All right, so if anyone has questions, you have any input you want to give, please feel free, interrupt at any time. I'm happy to go off course even if you've got something that you're thinking about or wondering, or if you want me to go back and repeat something, that's also okay as well. So let's first take a look at what's happening with the fundamental news. And in terms of the risk management feature I was talking about on the AvaGo mobile app, you can download the AvaGo mobile app here under trading platforms, AvaTrade Go. And you'll see when you're in this app, it's got some nice features. It calculates your margin requirements for you as you're setting up your trade size. And it has a feature on FX, gold, and silver, and maybe more assets soon, called AvaProtect, where for different lengths of time, you can have full protection against any losses during that covered time period for a small premium cost. And so it's another option in addition to, or in lieu of using a stop loss, at least for the time of the coverage, you wouldn't need the stop loss. And you could add it on once the coverage expires. And if it profits, it profits. All of the profits are yours. You just charge the small premium up front. And if you program your take profit or your stop loss marks using this app, it tells you. It calculates for you in your account currency your risk to the stop loss mark, your potential profit to the take profit mark, etc. So it eliminates the need to have a trading calculator or to calculate your exposures, that sort of thing, by using this app. So it's actually very useful and convenient, along with the extra risk management feature that's available on it. Now, when we get into what's happening fundamentally today, it's one of those days, again, where we see there's a lot of volatility on the market, but the movement of the assets hasn't given way completely to that volatility, to that fear. So we see the volatility index, if we look down here, S&P 500, VIX, that's the volatility or fear index. It's been up all day and it just went up even higher, okay, in the past 30 minutes to an hour, almost 4% up the volatility index. That shows there's signs of fear on the market, okay? Right now, the futures are green and the market opened green when the US market opened. And so, and if we look at the DAX and other areas around the world, they're also green. Grace, the AvaGo app is not available in Canada if you're in the Canadian market, not yet. We work with a partner in Canada with our regulation there, and we just haven't worked out the app to work there with that setup yet, but it will be soon. And so the AvaProtect obviously is not available there because it's only used through the app, the AvaGo mobile app. Most every place else it should be available on the MT4, MT5. In some areas, the AvaGo app maybe is not compatible on MT5 yet, but check with your account manager. I believe in most circumstances, the AvaTrade Go app's good on MT4 and MT5 accounts. Good question. Okay, so we see positivity in terms of the markets are green today, but we see there's fear on the market with the volatility index. Okay, so that tells you something's building. Yeah, the VIX is up, Alina, meaning fear is up. And you'd say, well, why is everything else green then? If fear is up, but usually the markets are red, they're dropping. And so let's keep that in mind as we look at the charts, that something has to give. Either the fear has to drop if the markets are going to stay green, or the markets have to drop if fear is going to stay up. So there's a huge potential right now for a large movement, okay, a correction. Okay, no guarantee, obviously, but there's the potential there when you see things are out of balance like that. Usually you don't see the fear index up and the markets are green, okay? So keep that in mind. Let's look at the headlines. Trump plans to sign bill pressuring China over the crackdown on their Muslim community. Okay, that maybe could create some fear. Trump maybe going to pressure China about something else now. He's already pressuring them about the coronavirus outbreak and how they handled it, and maybe didn't slow the spread around the world like they should have. He's pressured them over what's happening, you know, in Hong Kong, and now pressuring them about this crackdown on Muslims. So this creates fear, this creates tension, and if there's any back and forth that gets going between US and China, again, you could see markets pull back. You certainly could. So that goes right along with this fear rising, that this type of headline. We'll talk about OPEC in a moment. Good question. So we'll take a look at the OPEC situation and what's happening there. Grace, the easiest way to recognize there's fear on the market is that the volatility index is green. It's up, okay? If this is up 3% like it is, was nearly 4% up a while back, that tells you there's fear on the market. Okay. And then we start to look at the headlines, and you see kind of a negative headline here about US and China. We see another negative headline here, US's Fed's Main Street lending facility likely to start with a whimper. Okay, if you dig into this article, you'd think, wow, the US government has all kinds of lending and loans available because of the pandemic. They passed a special budget, trillions of dollars to support small businesses. And you'd say, well, why is that being looked at negatively right now as the Main Street small businesses have these loans available? And the answer is a lot of them are nervous because the low size loan that they have to take is like $500,000. And for many, not just some, for many small businesses, that's a lot to take on, that type of loan. And it's not just free money. They will have to pay it back. And so a lot of small businesses, some of the experts think, are going to be too nervous to take that type of loan and put that on their balance sheets, that it might be looked at negatively from other investors. And so there's a little bit of fear about the lending program to small businesses as it kickstarts soon. Another phase of it kickstarts. And so, again, just a little something, adding a little fear maybe to the markets today. The next article. Gold rises as investors bet on dovish signals from Fed. What does that mean, dovish signals? The Fed is going to have a statement and meeting starting tomorrow and building into Wednesday with their big announcement and statement on monetary policy this week. And when I talk about the Feds, I'm talking about in the US, okay? Their group that decides monetary policy. And so what does that mean if investors are thinking the Feds in the US will talk dovishly? Dovish would be the opposite of hawkish. What does dovish mean? Yeah, it means that these investors believe that those deciding monetary policy in the US over the next couple of days, these investors think that they're going to come out and talk not so high about things, that they're going to try and put a damper on all the optimism to say, oh, hold on a second here. Maybe things aren't as great as you think just because the stock market shot back up so quick. So investors are thinking that maybe what the FOMC committee in the US has to say over the next couple of days might not be so positive, okay? Gina, no, I don't think currency fixing. I don't know a lot about that topic in terms of, I think you're saying people playing with the prices or fixing the prices. I think mostly the currency values are moving to macroeconomic information that I don't know how much price fixing would be involved. But if you have information on that, I'd be happy to share. Okay, so again, gold rises, again, showing fear, right? This is 3 articles in a row that we're seeing that kind of goes along the lines of the volatility index being up all day today, right? Again, talking about fear, talking about gold rising as investors think that the FOMC committee this week will talk dovish, meaning not so high on the economy with what they're about to say, okay? To warn people that maybe there's some clouds ahead after the pandemic. So again, that tells us that maybe the market's ready to give way to this fear that's been there today. If we look at the economic announcement schedule, we see there wasn't a whole lot going on today. Some negative announcements out of the European Union. You see here, wow, that's really bad. German industrial production was expected to be down 7.5%. It was down almost 18%. Okay, so this was really bad for the euro. And I bet if we look at the euro against something like the yen, because the yen is a safe haven and there's been fear today. So I bet the yen looks good against a lot of currency pairings and probably looks really good against the euro right now, if we take a look at that. And so that's pretty much it. There was a positive number that came out of Canada, housing starts. And since oil has been up, maybe the Canadian dollar's bullish, maybe USD Canadian, maybe the Canadian could pull the USD down. We'll take a look if it's done that at all today. With oil being up, that's usually good for the Canadian dollar. And although it's pulled back some today, in general, oil has been up. And so that helps the Canadian dollar. And this positive announcement out of Canada on housing starts, maybe that helps push the Canadian dollar to strengthen as well. We'll see. Maybe the Canadian against the yen gives an opportunistic entry point for a movement. So we'll check out the Canadian maybe a little bit. And so let's go ahead. That's a basic snapshot on the fundamental news. Let's look what's happening here. And maybe we'll start out with that Canadian JPY and see what's happening. So I do see the Canadian has pulled down today. And if we look, oil pulled down a bit today. Okay, it corrected a little after the large climb. And so this could be an opportunistic spot. Okay, there's been some fear in the market today. While the equities didn't pull back, certainly the yen helped pull the Canadian dollar down as oil was correcting down. So now you might look and say, overall, oil has been bullish. It's been up a bit. This movement has pulled back to a support level, which was resistance here, resistance, 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 resistance. And then once it broke through, support, support, and now bouncing off that price level now. So if you're looking to make a move on the Canadian dollar with maybe limited risk and going with what might be the bigger picture fundamental news that's maybe in the favor of the Canadian dollar, with oil having been so bullish for a while, you might look here and say, this could be a spot to test this support level, okay? With a limited risk that if it breaks this low point, maybe below this support level down here, okay? Certainly it could come down and test this support here. If it breaks below that, maybe you're out with limited risk and your potential profit. If OPEC has anything positive to say coming up this week, certainly the Canadian dollar by end of week could work its way back up. Okay, the potential profit here on a move like this is about what, 4 times what you're risking to get below your stop loss level if you put the stop loss down a bit. And by the way, you could look to put off a protect on a move like this instead of a stop loss. Okay, so this is one potential move that obviously there's no guarantee which way this will go, but there's a huge potential for a correction back up. You see the climb went flying up with oil, the Canadian dollar did. Here's the pullback, and there's your support level sitting right on top of the support. So the risk reward there looks nice. The technical entry point looks nice, and the fundamental news maybe is on your side there with oil helping to maybe create some strength in the Canadian dollar, okay, after a bit of a pullback today. So that's one opportunity, potential opportunity you could try and go after if you like the fundamental news behind that. Now, if we look at oil, we say, okay, what did happen with oil? Why did the Canadian pull back today? And if we look, you see oil came down today. The Canadian dollar and oil seem to be following each other, right? It happens often, not all the time, but often. And you see, look at the support level for oil. Right at the same spot the Canadian support level was. It looks very similar. So we see resistance on oil from last week. We're on 4-hour candles here. Resistance and then the breakthrough, and now it becomes support, the old resistance right here. Okay, so we see it's sitting on a support level here. Alina, you're saying it didn't fill the entire gap yet. Boy, it filled a lot of it. It certainly filled a lot of it. Let's go to the 1-day candles. Let's show everyone what we're talking about. Here's that gap. Okay, here's the gap. And we were watching oil all last week, the week before, and we talked about this price level right here, right near this wick, and the beginning of the gap down here as being a spot where you might think about getting in on a buy on oil, because a lot of times once a gap starts to be filled, it rapidly can fill the entire gap or a large portion of it. Okay, so what we're looking at here is once it entered this gap, okay, here, Once it entered the gap, if you had your buy stop in, it darn near filled the entire gap. Okay, here's the bottom of the gap right here. Okay, it did fill the gap. I would push back a little bit on you there, Alina, and say it did fill the gap. Look here. This was the Friday close right here. Okay, I'm right on the bottom of that wick right there. Okay, this was where Friday was closed. And look where it came up to before it pushed back. It almost filled the entire gap. From the entry down here around 35 to 36, it rode all the way up to, if we want to look at the high point, it went all the way up to 40 and a half almost. Okay, so it nearly filled the entire gap. I would say it filled 95% of the gap. So most traders who trade fill the gap strategy would have already taken profit. When it was, I don't know, 90% filled, 95% filled, usually most traders who are trading that strategy take profit just before the resistance. So they may have already gotten out, many traders that were trading that. Okay, so now certainly it did not actually test the resistance though. It didn't test it. It got close and just pushed back. And so that's where Liam and some others, Alina, you're saying it's not done yet. That's your opinion. And I think you might be right. I think usually when there's a resistance level, it's going to test it a few times before it has a real big reversal or a breakthrough again, right? So this was a nice pullback. Now you have room. If you think oil and what OPEC has to say over the next day or two, and trust me, they're going to have something to say. If you think they're going to have something to say that will help the price of oil, look at that pullback. Look at your opportunity to get in just above another support level to see if this is going to go back up and test that resistance level that's just out of sight up here. It's just out of sight. Okay. Certainly a take profit level could be right there. This resistance is near the completely filled gap. So if this rushes back up here, which it easily could, that might be a spot to take profit again. And that would be what, a good $2 climb in the price of oil, $2 plus. You could make a healthy profit with a $2 rise per barrel. Okay, so that looks like something that makes sense. And this take profit level here, somewhere in this range, seems to make sense because that's darn near, if it gets up to that line, darn near completely filling that gap again. Okay, and so that support level looks nice, even if you don't think the fundamental news is on your side, or even if you don't pay attention to fundamental news. This is a nice technical entry point. It's on a nice support level after a strong breakthrough last week. You don't have to risk much to put your stop loss below that support, and you have a much larger potential profit. Now, some would say, and I'm included in that, I might go zoom in now on the 5-minute candles and say, I want to see an uptrend first, right? So maybe I'm waiting to see this resistance level get broken before I would buy. It's ranging between here and here. It's a short range, right? Up and down, up and down. You might say, okay, I'll put a buy stop up here. If it breaks this little resistance, then maybe you feel like, okay, now I'll go with that uptrend and put my stop loss below this support level down here that we drew, right? And that helps in terms of avoiding situation where the uptrend hasn't started and the support level breaks before it ever gets going. So you can sacrifice some of the potential profit to wait for confirmation of a breakthrough here and have your pending order here. In that case, that would be a pending buy stop, right? So we'd go from market execution to pending order. You could say, okay, if this hits 38.5, I'm in. Okay, that would be a buy stop, by the way, buying from a higher point, 38.5. You could say my stop loss would be down at 37.9, which would be below 2 support levels. And you could say my take profit is going to be up here around 40 because it got to 40 not that long ago. Okay, and this is just an example, folks. I'm not telling you this is a trade that you should make. You would only do what makes sense to you, but there's the pending order then. So now I've got my buy stop prepared on crude oil, and if I get rid of some of these lines that I drew, you'll see my entry points. So let me go back 30-minute candles. There's my stop loss down here. My entry point is just below this line I drew. So okay, good. That is my entry point. That red line, it's the same color as the lines I've been drawing. So I can get rid of this line if I wanted, but that's my resistance point. That's my entry point, the second red line. And so my entry starts here. And then my take profit is before this resistance up here. And so it's about a 3 or 4 to 1 potential profit compared to my risk. And so, Isaac, I'm glad it's helpful. Sometimes it helps to go through setting up pending orders like this because it helps with the concept sometimes. So I'm risking from, if it breaks through the resistance, now it confirms an uptrend. I get in on my buy. My stop loss is then below that support and a second support to here. And I still only have to risk a small amount to be below 2 support levels then, and try and ride it up to the first resistance up there, which is about 3 or 4 times more profit. So again, a great technical entry point. The fundamental news, I think, could be on the side of that with what we've seen, and with the OPEC meetings coming up or meeting. And so the fear in the market's not helping that move. We see the fear index is up, and so that's helped to pull oil down. But technically speaking, it's a nice entry point. And there could be some fundamental news within the next day or so that goes your way with this. Okay, so even if it broke and hit your stop loss and then went back up, you could try it again. You only need to be right once out of 2 or 3 tries, and you would profit in this type of setup because you're risking so much less than the potential profit. So I like that setup for not only the first try, but for a re-entry for a second try or third try if need be. Okay. All right. So let's look at some of the major indices. All right. We see the resistance starting to form, right? The markets were green today on these major indices, but you see resistance on the 1 hour, 30-minute candles here. So you're starting to see, if I go to 15-minute candles, double and triple tops, right? Resistance. It's having trouble climbing right now. And it's at such a high point, you might say, well, the volatility index is up. Fear is up. Those headlines we looked at seem kind of negative. Maybe there's a pullback ready to happen. There's no guarantee, right? But we're talking about potential when we trade. Look at the climb. Look at this climb on the 4-hour candles, how much the market has climbed. Okay. Obviously, the higher something climbs, the more likely eventually there is for a pullback. Okay. So we're just looking at statistics here, probabilities. Look at the DAX also, the FTSE. It's the same thing. Now the FTSE pulled back already. You see that? Look what the FTSE did. It dropped. If we look at the CAC, it pulled back more. Not a lot, but some. The Nikkei also had some dropping already today. These are 5-minute candles. Look at the drop. So if we then go to the Dow, we say, well, it hasn't dropped yet. It very likely could. All right. So if you were going to take a move on this, you could even do, let's say I do a market move. And again, I'm not telling you should do this, just giving you an example. Now I put my stop loss above the high mark, right? Above the resistance. So 27,425 maybe. I put my stop loss. So let me add a stop loss. 27,000, what did I say? 475. Just as an example. Okay. All right, now I have my stop loss just above this resistance where you can't see it, right? Let's go to 4-hour candles, 1 hour. There's my stop loss up here. Giving myself a nice wide strike zone. If it tests this high point and goes by it by a little bit, okay. So I'm up let's see, 27,475 compared to 345. I'm up 130 points to my stop loss, 130 whole dollar points. All right. My potential profit, if this comes down to this first support level down here, okay, that's 27,033. That's about 400 points potential profit. Here's the first support level. So I might take my profit just before there if I'm a technical trader, just wanting to get out on the first support level. So that would be 27,000, let's say, and 50 to be just before the support. So I might modify that again, get my take profit in here, 27,000 and I don't know, 65 even. Okay, so now I've got my take profit here just above the support, my stop loss about 130 points above my entry. So now I'm risking about 130 points to make almost 300, to make 300 points. Okay, that's better than 2-to-1 potential profit to risk. And by the way, I don't have to risk that much. Couldn't I move my stop loss a little closer? Let me drag it down. Yes, I accept one-click trading. There. Now when you drag it, you don't have to go in. Just one click, you can drag it and move your settings. That's still above the resistance level. You see that? So now I'm risking even much less. I'm risking only 50 with 300 potential profit. Now that's a 6-to-1 ratio potential profit to risk. Okay, you see how easy it is to manage your risk. So that's plenty above that resistance. So if I go 30-minute candles, look, it would have to come up and break this high point in order for me to hit my stop loss. And then I'm only risking a little. And if the fear takes over today, it could easily come to the first support level, right? So again, I'm not trying to say I know what direction the market will go. I'm looking at the fundamental news. I saw a lot of negative headlines. I see that the fear is up. And unexpectedly, the equities are up with all this fear. So that seems to be opportunistic. There's the potential for a pullback. So then you can go after that, right? And so, yeah, okay, I'm showing a little profit already, $40, $55, $62. Maybe it'll just come right down. And I think there's a better possibility that it'll come down to that support level than to go up to my stop loss. Otherwise, I wouldn't have done it, right? Or at least a 50-50 probability with such a small risk to my stop loss. I'm okay with that. All right. So just some examples, folks. You could be doing the same thing on some of these others, but they already dropped, right? The Nikkei already dropped to the support level. Look, here's the support level. It already dropped from up here. The FTSE, it's in the process of dropping right now also. You can see red candle dropping. Support levels down here. You see resistance, breakthrough candle, support. So this has a little ways to go before it would reach the support level as well. All right. We could take a look at, we looked at oil. Let's look at gold. We see gold is up. Fear is up. It makes sense, right? Gold has climbed. The fear levels are up. And now we see some of the equities giving way. Some of the indices giving away to that fear. All right, just putting the fundamental news on your side to try and get a little bit of wind at your back, to improve maybe the likelihood of your trade winning, even by a little bit, can make a huge difference in your P&L at the end of the month. We went over oil. We'll go back to it if you'd like. There's some folks asking about oil again. Here's an old resistance support level. You see here support on gold, and then the breakthrough. So it was predictable it might have trouble, gold might have trouble at this level. You see it's pausing. But if gold breaks through this level, you could see a big run up on gold. You could see a big run up on gold if it breaks this current resistance level. This was old support, and then a breakthrough. And so as big as this breakthrough was on the way down, it's possible if it breaks through, you could see that big of a run on the way up towards the next resistance level up here. Okay, What kind of pending order could you put on gold right up here in case this breaks through? What kind of pending order might make sense up around 1750 if it breaks through this resistance? Yeah, buy stop. A buy stop on gold if it breaks this resistance level gets you in on any momentum that might exist if it breaks through this old support level, which could be a significant breakthrough if it breaks through. Okay. All right, let's take a look back at oil. Got some questions on oil. Okay, so we drew the line on oil. We said it looks like it pulled back in a greater uptrend. For anyone who joined late, there's a big gap on oil that starting last week started to be filled, and it nearly completely filled that gap. And right on cue, as it reached the top of the gap, it pulled back. Okay, very easy to predict that it would pull back as it got near the top of this gap, where that's the first resistance level that we drew last week. And it pulled back almost right on cue after filling about 90–95% of that gap. So what's oil doing now? It pulled back and formed a support level right on an old resistance level. Resistance, breakthrough becomes support, support, support. So we talked about the possibility of a move on oil to have a stop loss below this support. Not that it couldn't break it, but you don't have to risk much to get below it. And your potential profit, if it now bounces back up, your potential profit could be much more. And it looks like it's still trying to bounce off that support level as we look at it. Okay. Now, another thing we can go back and look at on the fundamental news. Okay. Look at starting tomorrow and into Wednesday, you will see on the economic schedule this week. Okay, here's tomorrow, Tuesday, OPEC meeting. You see this here? OPEC meeting. That's tomorrow, 6 a.m. New York time. This is set to New York time, I believe. Let me check. GMT -4. Yeah, this is on New York time. So 6 a.m. New York time, the FOMC meeting starts. Okay, and those meetings tend to run for hours. So let's find it again. Back to Tuesday. Here we go. And OPEC meeting. If I said FOMC, I mean OPEC. We're talking about oil here. 6 a.m. New York time. Okay, 10 a.m. GMT, 11 a.m. UK time. OPEC meeting gets going. And there will be news leaking out before that. So oil will have lots of possibility for big movements tomorrow. And those meetings will go throughout the day. And then if we look into Wednesday, we've got FOMC meeting that's in the US. So another huge potential driver of oil, gold, and major indices. Okay, between the OPEC meeting and then the FOMC meeting, interest rate decision, a lot going on Tuesday and into Wednesday. Okay, so tomorrow OPEC gets rolling and the FOMC meetings, and then into Wednesday we continue with FOMC meetings and crude oil imports on Wednesday. So a lot for oil and the markets tomorrow and Wednesday. I don't think OPEC's going to come out and want to say anything that's going to be negative for oil prices. They just agreed over the weekend. OPEC and Russia are cooperating with production cuts. I think they want to come out and show a unified front, and that may help oil try and test that top of that gap again. Okay. With that said, that's my educated guess, right? It doesn't mean for sure that's what will happen. You've got to go with what you think. And so the good thing about trading is you don't have to be right. You just have to be smart. So at the same time, you could be buying from this support. What could you put down here in case the news is the opposite? In case the news makes that support level break? Back yourself up with a sell stop down here, right? Back yourself up. the point is there's going to be huge momentum tomorrow. And so it's going to break one way or another, right? So potentially both ways. You could see a breakthrough one way, big movement, take a profit, could come swinging back the other way. Set up your pending orders, not for those OPEC meetings right now, right? Because they don't happen until tomorrow. You can trade on this movement now if you like it. But tomorrow, if the movement was, let's say, in the same spot it was now, then you can set up your pending orders for breakthroughs because you can expect major movements. So early in the day tomorrow, before those OPEC meetings get going, take a look at the chart just like we did now. Put your pending orders in smart places, below a support level, above the resistance level, waiting for breakthroughs. Because if the news goes one way, you can win in that direction. If it goes the other, you can win in the other direction. We don't have to be in the business of trying to guess what they're going to say tomorrow. Prepare for no matter what they say. Be smart. Don't try and be right. Okay? Vinod, I don't have any predictions about when oil could go up and hit 50. I think it's going to be a bumpy ride before it gets to that point because there's so much mixed news that will come out about, economies having trouble after the pandemic, potentially bad economic numbers, potentially. I think it'll be a bumpy ride, but eventually, why can't oil reach 50 again? But I'm certainly not going to try and predict when it might happen, if it might happen under a certain time frame. But certainly as good news comes out about economies recovering and coming out of quarantine, that will serve as a bullish stimulus to drive it. And so what we're looking at here on the chart is be prepared for that. You don't have to know when it will happen. Have your pending orders waiting for it at strategic locations. We didn't know for sure when that movement would enter the gap when we talked about it 2 weeks ago and 1 week ago. But boy, once it entered, away it went. And all you had to do was have your pending order waiting for it. And it was an easy profit. Same thing with going between 40 and 50, right? Just be ready for it. Have your strategically placed pending orders ready. And when you see a market condition like this, a nice support level, you can take your market moves. It doesn't have to be just a pending order, okay? Right now, I like a buy position here, backed up by a sell stop. I think you have a potential for a large move one way or the other right now even. Okay, so maybe we look at that Euro JPY. We talked about the Euro having problems, right? Let's look at the Euro. If I can find it, there it is. Yeah, as expected, the Euro pulled down a ton today against the yen. Okay. I don't see that as an opportunistic entry point because I haven't seen any good news about the European Union today. We looked at those economic announcements out of the European Union from earlier today as we started the webinar, and they were bad. So, if we go and look back here, this is what we looked at from earlier today. Let's just go on today's numbers. Okay. German industrial production was really, really bad today. Okay. And so even though on the chart, this looks like an opportunistic entry point to buy on the Euro against the yen, I think you could have further dropping. Those are really bad production numbers. Okay. And really there's a support level down here that it hasn't reached yet. So not to say the Euro is going to keep plunging, but it hasn't reached this support level here yet, and there's bad news on the Euro. So if anything, you could think about shorting the Euro still if it climbs to a point that you think it should drop from. Okay. Any other questions? Specific assets you'd like to look at? Let's quickly look at the Nasdaq. I'll take that request and then we'll call it quits for the evening. Nasdaq's up through the roof right now. Okay. 4-hour candles, we see a resistance level. 1-day candles, it broke this resistance back here, okay? There's your support on the way back down, by the way. This would be your first major support level over here, okay? Let me get rid of some of these lines that are showing. We don't need all that clouding things up. Okay, so this is your first support level, and you see it came down and bounced. You see it hit right here and bounced up. Why did it bounce from that spot? Look, 1-day candle support level. That was so predictable today. So if we then go, look exactly where that wick bounced from. 1-day candle support. And if we then go to 15-minute candles, look, there's the line I drew from the 1-day candles, from way back here, a support level on the 1-day candles. As soon as it hit that mark, up it went. Okay, that's a technical bounce. It's a technical bounce. There were a lot of buy limit orders waiting for that mark, and up the price went when everybody bought. So this could be an opportunistic spot if you think that the fear is going to take over before the end of the day and there might be a sell-off, if you believe that. So you might say, if this movement gets up to this resistance again, somewhere near this resistance level, that you could short the market again, okay? With your stop loss not far up if it breaks the high point. So could be an opportunistic spot to sell from if you believe in the fear that built today. And so you could do a market move, you could do a pending order if you don't like the entry point yet. That's up to you, right? And so you could be looking here for a spot to pick your spot to short the market without having to risk much. Again, maybe it goes up and breaks the resistance, right? Maybe. But the fundamental news maybe is on your side with the volatility index being so high, having climbed. So this is a spot, again, potential for movement back down to this support level could be quite large. So that's something you could be looking at maybe to try and take advantage of if you see that's at an opportunistic spot that you like. Okay, great. I think this is a good spot to stop. If you joined late, if you want to look at the session again, remember everything's recorded. We're on the YouTube channel. By tomorrow, the session will be uploaded, and we'll be going again on Friday. Okay. All right. Good luck trading this week. Really huge potential on oil, the indices, gold through tomorrow and Wednesday with the OPEC meetings and the FOMC meetings. Huge events occurring in the next few days. Get your trades ready. Okay. All right. Bye for now.